video is going to be about broadening formations, how I trade them, and it's going to be a definitive guide on how I trade broadening formations, how I spot them in the charts, what an A+ setup looks like. And first of all, I'm going to go over a bit about who I am and what I do. So before trading, I studied business economics and business administration at Aarhus University. So I studied math, statistics, and quantitative analysis. Since 2020, I've been trading, and for the past year or two, I've been full-time futures trader. I got my own public Discord that I started in 2023 with over 100 members, and then on a day-to-day basis, I am a live trader, streamer, educator at KingLine Capital. I started that job in 2024, and I'll put a link in the description for you guys that want to check it out. That's a free trial, and also I've got a code if you want to join the Discord, and you will receive a 30% discount monthly from my link and from my code. Alright, so Tuesday, Wednesday, Thursday, I stream London live, I take trades live, and you can ask me questions whenever you want. KingLine Capital. So first of all, let me start with explaining and defining broadening formations. What we're looking at, how do you spot them in the charts? How do I spot them in the charts? Because I know a lot of people think they're trading broadening formations when they really are not. And I think a lot of people know how to spot them, how to draw them, but have no idea how they're going to trade them. Where your stop is going to be, where a TP is going to be, how much size, what's the risk, what's the expected value of a trade. And those are some things that I want to go over during the presentation here. And I hope you guys find it useful and can use it in your own trading, or even just get inspiration. So basically, a broadening formation is a technical chart pattern depicting a widening channel of high and low levels of support and resistance. Broadening formations are also a way to indicate increasing price volatility. And swing traders, for example, like me on a higher time frame, can capitalize on the broadening formations, whether we hit the high of it or the low of it. So basically, just pretend that we have two diverging trend lines, and we got two free swing points, two of three swing points that are higher highs, and two of three swing points that are lower lows, right? So we have a series of higher highs and a series of lower lows right after each other. As you can see here in my chart, higher highs and lower lows. Ideally want to find two or three of these swing points before I draw a broadening formation. Also, the highest probability broadening formations will be originating from a stage of consolidation. So a tight range in price where we are consolidating, making higher highs and lower lows in the same legs. Alright, let's get moving. So this is the C setup. The C setup, 25% size is what I normally use for this one if I want to trade it. So a C setup is basically just the broadening formation, no confluences, just that in itself. In this case, we have this very, very tight range, as you can see here. We have lower lows and we have high highs. I hope you can see my cursor. And you can see that every time we touch the lower end of this broadening formation, we kind of get a nice reaction. And also, you can see on the top BF broadening formation, when we react to that, we get a huge drop down to the bottom. So that's a 25% size C setup. No confluences, just trading the broadening formation alone. No market structure, no bias whatsoever. Now, moving on, I want to add some confluences to get a high probability setup. One of my ways of doing this is using premium and discount levels. So let's say I want to take a buy in the Nasdaq with a broadening formation, and then I want to add a Fibonacci on top of the range and find a discount level, so I know I'm longing from a discount and not in a premium. So basically, this is the Fib settings that I use. These are the levels. And if we have a BF hitting and the level hitting at the same time, that's a better setup than just the broadening formation in itself. So I use these as confirmations to the size and to the probability of the trade. Moving on. This is the B setup. This is half size setup. And as you can see here on the chart, I have put on a Fibonacci now with the discount and the premium levels. And as you can see on my chart, if you want to look for buys in this case, at the 50%, or some people call it the equilibrium of the price, we have the broadening formation coinciding with the 50%. So that always gives a reaction. So that's a nice easy long. In this case, we have midnight open, which is a nice level to long. We also have the top BF, which could potentially be a last target here. Drop back down, we have another discount level, right? Another discount level. Again with the BF touch, that's another easy long, easy 20-30 points every single time. The same would go for the short. If I had a premium level up here, I would use the premium level and the broadening formation and confluence with each other for the B setup here. Now I want to go over just really quick. I know most of the audience here knows what a fair value gap is. Some people call it a busy or a SIBI or whatever. But basically I just want to briefly go over it since I'm going to be using it in the next step of this guide. So essentially it's 3 consecutive candles, and if it's a bullish fair value gap, it's from the high of the first candle to the low of the third candle, and vice versa for the bearish fair value gaps, right? And that is the gap that we are looking at when we want to trade off of a fair value gap. Pretty simple. Moving on. This is the A setup. It's one of my favorite setups. Now we have the broadening formation, and we also went over the discount and premium levels. Now when we add a busy or SIBI, also known as fair value gaps, we have a third confluence, right? So that is 3 confluences. In this case, I've added it down here. We have a 1 minute bullish fair value gap that is coinciding with the broadening formation as well as the discount level. So that's an A setup. That's a really, really strong setup. I'll take that every single time. It always gives a reaction. You can always at least get 10, 20, 30 points and a break-even trade out of this. So yeah, premium level, broadening formation, and fair value gap. That's the A setup. 75% of my size will go into these. Now moving on. Quickly want to go over standard deviations, how I'm using them and how I am interpreting them. So here on the right side is just a brief explanation or quote from the ICT mentorship itself, where he explains what it's used for. And basically it's just used to measure levels and deviations for deeper price movements. So in this case, this is the ES weekly chart I have on my screen here. You want to find the high of a leg that put in the low before we rally it, basically. So it's a swift price move, and if it's for the upside, right, you want to find a high to a low, and if you want downside projections, you want to take a low to a high. And then you want to look at the numbers 2 through 2.5, standard deviation 2 and standard deviation 2.5. Those are the ones you want to look at for pullback, as we see here. And then we have standard deviation 4 and 4.5. Those are the ones I look at for a reversal. These are the settings. It's also just a fib using TradingView. These are the settings I have. Right. Moving on. A plus setup. This is the A plus setup. This is where we have all confluences, all 4 confluences aligning with each other. This is one I'm gonna hammer 100% size every single time. Easy money play. So we have the broadening formation. We have a discount level of the range. We have a bullish fair value gap, and we have standard deviation 4 or 2.5. And as we can see, I've added the standard deviations from the low to the leg to the high before we get the quick expansion down. And as we can see, we have 2.5 of this leg from up here, and we have on the smaller leg here we have standard deviation 4. So this reaction here that we got off of that was an A+ setup to take. Just some golden nuggets before you start trading broadening formations, and where you should use them, when not to use them. And obviously you should go back test this yourself. Don't trust me blindly. See how it works for you. There's no indicator to draw them. You gotta draw them yourself like I do. And that takes practice, that takes experience. It's not something you can just be learned in a step-to-step guide or manner. You gotta do that yourself, put in the work. I've given you some guidelines as to how they work, how I frame the trades, but in the end drawing them will be your own job. So bullish structure, you want to look to along the bottom of the BF, the low of the BF, right? This is bullish structure, we want to along the lows of the BF, right? And vice versa for bearish structure, that's when you want to short the top BF. That gives you the highest risk reward setup, and that is just a higher probability setup as well. I think that's pretty understandable for a lot of people. In bullish setups, in bullish structure, normally we get a sweep of some lows and then we run, right? Stop hunt or whatever you want to call it. And you can use the BF to catch the stop hunts, right? That's quite the idea of this. Now, when we have an intermediate term low or high that gets taken, so this is like internal structure, not external structure. When we have an intermediate term low that gets taken, you want to draw a BF from that intermediate term low to the new swing low that's made. And then we will, 80% of the time, we will get a third tap of that BF low. So that will be the third tap. So we have the intermediate term low, that's a swing point. And then we have the new swing low that took out the intermediate term low, that's another swing point. And then when it comes back the third time, that's when you want to long, and you want to long into the intermediate term high that we made just before taking out the intermediate term low. Vice versa for shorts. You want to see intermediate term highs taken. You want to see the BF. You want to draw it from the intermediate term high plus the swing high, and then you want to get a third tap of that BF high, and you want to short into the intermediate term low. So those are some tricks as to when I find the setup especially useful. And these are higher probability setups. So these nuggets, golden nuggets, are basically just some ideas as to how you would implement these and when you would use them in structure. So you don't just blindly long and short whenever you see a BF. That is not the way to go. That was the video. Pretty simple and quick walkthrough of the broadening formations. If you have anything that I missed or anything that I need to add to the video or anything like that, hit me up in the DMs, hit me up on Twitter, hit me up in the Discord. I am here to help with whatever questions you have to me as for how to use the BF, how to trade them, if you have drawn yours correctly or anything like that. Cheers guys.